What's going on, guys? Is this a new bull market and am I wrong? Do you think it's a bull market or a bear market? Fun fact, every single bear market from 1950 proceeded to make an all time high after the Golden Cross, which just happened, by the way, guys, on the S&P 500. One quick thing I want to show right before we jump in the bull thesis, right? Because I decided to spend the entire day today to get in the bull thesis, understand the bull thesis, right, and see if what if the bears are wrong, right? Because that's a possibility, right? There's a lot of bears out there. They could be all wrong, and they could be missing on a big bull market. So I've decided to take the entire day to scroll through the internet and find the bull thesis. But right before I jump in the bull thesis, I just want to quickly show right here the smart money and dumb money confidence. And you're going to see why this is important to just kind of understand what the hell is going on, real quick in the order flow. This is not like a real order flow. It's, but it's still fun to watch. And you can see here, right, in my last video, I was talking about this bull flag, right, this contraction pattern. We broke out a bit, and then dumb money, which is the red line, was buying. So retail was buying this breakout, and then right after the breakout, we dropped 2%, and basically retail capitulated, and right after they bought the breakout, they sold after because the market went down. So they basically took a L. But the point of this is, look at the blue line, which is smart money, and this is what's interesting. Smart money is buying this dip. They are buying. You can see the blue line is going up, okay, which is very interesting because smart money has been, very good at timing the tops and bottoms since this bear market. And it's very funny to see them FOMO. Basically, you're having smart money FOMOing in this basically bigger picture wise. We have basically an ascending triangle, and a lot of bulls are calling that out, and so that's a part of their thesis, which we're gonna dive in right now. I just wanted to show that real quick. So what is the bull thesis that everyone is believing in right now? So I'm gonna give you some tips, right? I'm gonna start with Ross Jorber, right? AI started the new bull market, okay? So AI saved the market. Institutions are long stocks because of AI. AI is deflationary, so you want to buy stocks and bonds in a deflationary market. Inflation and the Fed does not matter. All of this will bring us to the final raging bull market leg, that will then bring us to the final blow off top like in the 1920s, okay? And so I'm going to show you right here, okay? I'm going to go to this guy's Twitter profile. You can go follow him, shout out to him. This is not me criticizing or, thinking I'm better. I'm actually genuinely interested and very impressed by his calls. And so I just wanted to show quickly, what a lot of bulls are looking at, right? So this is what they're looking at. They're looking at basically they think that we're gonna basically continue and then and kind of like in the 2000 dot-com bubble or in 1929. So they basically think we still have that one last huge leg right before we have that huge crash, and basically it would be a depression, right? And they could be right, guys. I could be completely wrong, and maybe we do have a huge leg up. And so that's basically what they're kind of calling, and it's kind of interesting, they're also talking about the percentage retracement, right? And it's not a bad reasoning, right? Right now the Qs, the Nasdaq is at the 61% retracement Fibonacci, right? So they're talking about all of these things. Also, this I have no idea what the hell this is. It's a band. It looks like a band. It's like a EMA band. I'm not too sure, but it's very interesting. That we finally broke out of this band, just like in 2007 and in 2000. And yeah, so this is very interesting. I'm not too sure what this is, but I love to just kind of try to understand, and maybe I'm completely wrong, right? The ascending triangle. But then there was another one. This one was a little bit kind of yeah, right here. This I wanted to show this right here from Kosh. Shout to Kosh. This is interesting. This is the first time I've ever seen this in my life. I'm not too sure what it is, to be quite honest. But yeah, they seem to basically to call that we're still in a secular bull market, and that we have not had this one last huge raging bull market. Like, this is not just a bull market. Like, they're calling for a raging bull market, and they could be completely right, and that's what I'm trying to figure out, because I want to make sure that I make great gains, right, in the markets, that my parents make great gains in the market, right? So we're here to make money, to learn, to educate ourselves, and to understand, you know, the bull case and the bear case, right? And the bear case is simple: inflation, the Fed, liquidity in the system, right? Blah blah blah, right? And personally, I'm still a bear, bigger picture, and the reason why is not my personal opinion. It's because I have a system that I've used that made me a lot of money, saved me a lot of money, and it still has not told me to buy into that this was the bottom. That's why. And but I did take some longs, right? So, and I did call this rally in my previous video. You can go check my previous video when I called the buying opportunities, and to be careful on the short side when everyone was thinking we were gonna crash like in 2008, right? So and usually I'm a bull, guys. I'm a bull most of the time. It's exhausting being a bear, guys. It's terrible. I've been a bear for like 2 years. It's so bad. It's not even funny. I hope they're right, man. I'm just gonna get back in the market, and I can't wait for the crypto bull run. A lot of money to be made in crypto, guys. A lot. I think this crypto cycle is gonna be nuts. That's for another topic of a discussion. Okay, but going back to the bull run, guys. Okay, so AI saved the market, basically. That's pretty much it. Okay, and all of this is justified with technical analysis, guys. Okay, the bulls right now, okay, their entire narrative, okay, and their entire thesis is basically price action and technicals that are basically following the fundamental bid, which is AI and technology, and that it's deflationary, and that productivity is gonna go through the roof. And I think that's pretty much the thesis. If I got that right, comment down below if you think I'm wrong on that. I'm pretty sure I'm close to what the bull thesis is. That's kind of my understanding of it. I could be off, obviously, by a couple of points, but that's pretty much what I understand for now. My problem with this thesis is the internals, and what I mean by the internals is credit, bonds, interest, the Fed, right? Liquidity in the system. That's my concern, And in my prior video, you can go look at what I mean by internals, where I just show the chart of QQQ, right? Compared to HYG, high yield credit, TLT, IWM, right? And it's not following, guys. And every time we've had a bull market, everything follow. Even during a bear market rally, usually indexes follow each other, but this time they do not, and I was calling that divergence out in my prior video. But that divergence has not seemed to stop the Fed. Excuse me, not stop the Fed, stop the QQQ from ripping another 2% yesterday. So that's pretty much it. I'm not too sure. My macro system is still telling me we're at the peak of the cycle, the macroeconomic business cycle. There's no new liquidity as well. So, right here in Sentiment Trader, I like to look at excess liquidity real quick. I don't know what the hell is, I don't know why this is looking like this. This is very weird. Okay, I think there's a bug with this. That this is not working. I don't know why it's doing this. This is not what this looks like. And now all of a sudden there's like, yeah, I don't, okay, let's just forget. Why is this doing this? Excess. Wow, this is weird. This is very weird. Okay, anyways, I don't know why it's doing this. So yeah, so basically another person that I find interesting to look at, that he's a huge bear, and shout out to him. He bought some Shopify in mid-June of last year. I also bought some Shopify, made a lot of money on it. So shout out to him for spotting those. Amazon as well. I bought some Amazon, and I didn't buy our RH though. I do like RH. But he has some very good points, and you can go look at his account. He has some really good points, and this is one of them that I would like to touch upon. Um, oops, give me a second. Right here. So basically, right, I did a little page presentation just to kind of, show you guys the bull thesis. And this is a good point, right? That right now the rally is being fueled by XLC, XLK, XLY. Well, XLY is kind of soft though, and I called it out in my last video. But it's coming from the sectors that perform very well during a bull market, and those are the sectors when a bull market starts where you see a lot of money going in. You know, and that's a very good point that Bobby29 has about this being a bull market. And right here we have Lisa Ann Saunders. Yeah, she's calling this the 52-week high. This is very interesting, right? This is one of my complaints about this bear market is that, this new bull market, right, is that it's only led by a couple of names. But she's basically using that as a bullish case, but I would thought it was a bearish case, and I could be completely wrong. She's on the other side. She's basically saying this is good because the bull market is really going to start ripping when everything starts following those names, right? So you can see right here, right after the bottom here, we started going up a lot, and then everything started going up, right? It wasn't just a few name, right? Only 4% of S&P 500 members have made new 52-week highs. And for her, it's a bull case, right? So this is interesting. I never thought about this way, and this is why I wanted to do this video. I wanted to, kind of look at the other side, because I've been following a lot of accounts that have had tremendous calls, right? Shout out to Kitty on Twitter, shout out to Wifey as well on Twitter, that I learned a lot, and they had some really good calls, but they could be wrong on this bear market continuing. No one's right forever. So that's why I'm trying to understand, what if I'm wrong, right? And that's a part of, at the end of the day, I'm in the markets to make money. I'm not in the markets to have a bias or to, I'm saying? I'm here to make money for my parents, for myself, to make some great gains for the next 10 years. You know what I'm saying? That's the goal, guys. The goal is not to have a bias and to miss on rallies or always be bullish and lose all your money during a bear market, huge macro drawdowns, right? All right, anyways, another point from the bulls is this. This is from Charting Cycles. Also, I would highly suggest you go follow him. He's very bullish. And basically, this is a screenshot that I took from a back testing of the Golden Cross, okay? I'm not going to explain what the Golden Cross is. It's just EMAs, basically. I'm not sure if this is the 50 and the 100 SMA or the 200 and the 100 SMA. I'm not too sure about that one, and I'm not too sure on which time frame this data was backtested, but it is accurate. This is not the first time I've seen this, and basically he's calling this a new bull market because the Golden Cross has crossed. EMAs have crossed. And another thing that was interesting that I took in screenshot was that this QQQ bear market rally has now lasted 228 days. The longer bear market in rally in 2008 was 80 days, and in 2000 was 100 days. So that's a good point, And then the final big bull case right here, the secular bull market that I keep hearing from the bulls, and they could be right, This is basically 1949 to 68. It's a secular bull market is about 20 years, guys. It lasts about 20 years, and basically their thesis is we have another 10 years. Despite the fact that the market is extremely high, they think we have another 10 years, and they could be right, and good gains, not like 5%, like big gains, okay? That's a secular bull market. Those are big gains, big boy gains, okay? And you can see right here, right? The average here was 16% annual return from 1950 to 68. 1982 to 2000, 20% average return. Jesus Christ. And I'm going to show you, why this is so important, okay? And right here, the current secular bull market, 12.5%, guys. So yeah, and we have another 10 years according to the bulls. And this is a bigger picture, 122 years. I took this from One Rental at the Time. Shout out to One Rental at the Time. It's a YouTube channel about real estate, and Dan Bird, which I've learned a lot of really cool stuff about, how to trade the market, and he pointed out some really good stuff about this being a bull market, and he had some good points, that we're seeing the characteristic of a bull market, especially in the big names, go up, pull back, to reverse to the means, the 21 EMA, then we go right back up, right? So, and those are really interesting points that he calls out, and right here, the green boxes are the secular bull market, red boxes are the, what are those? A secular bear market, my bad. And so that's the big case for the bulls. And this is really important because I'm going to show you guys why this is super important. Because if you go on a investment calculator, right? And right now, let's say I'm 23, right? So in 10 years from now, right? If this bull market lasts another 10 years, I'm going to be 33 years old, right? Let's say, okay, let's do this calculation for my parents. The age is not important. It's the spread. It's like, 10 years, right? So it's going to calculate it for a 10-year period. And let's put $1 million, right? And let's say you contribute zero money, okay? And you make 10% a year, right? Which is a very conservative amount when you actually look at the past historical data from secular bull markets, right? Your $1 million in 10 years from now would be worth 2.7 million, guys. Okay, and this is important because I'm looking at this for my parents and for myself, right? And this is a lot of money, guys. And this is why, I'm trying to understand, what if I'm wrong, right? What if the crazy bulls and the crazy AI theory they're actually right? And I don't want my parents to miss on one last 10 year of bull market, right? And get the 2.7 million with $1 million of cash. You know what I'm saying? That's a lot of money, So that's why it's important to kind of try to understand, what other people are talking about. So, what are my other issues with this thesis, right? Because I like the thesis, to be quite honest with you. It makes a lot of sense. Technically speaking, the technicals are really aligning to the upside and telling the bears that they're completely wrong and that the bears are in denial, right? So now the question is, are bears in denial? You know what I'm saying? Comment down below if you think the bears are in denial. If you look at surveys, right? Right here, I don't know why Sentiment Trader is not working properly, but if you look at the AA bull survey, right? There's not a lot of bulls, guys. There's no bulls. There is no bulls, guys. Like, it is dead, and the market keeps slowly grinding up, right? So now let's look at the bears, right? I think there's way more bears than bulls. Yeah, look at that. Look at that. Look at the surveys. The surveys are saying that the bears are in denial, guys. This is the surveys. Those are really reliable surveys. And yeah. Oh wow, you see right here, there was no bear left, and then boom, all of a sudden, huh? Interesting. Yeah, and now, I think a lot of bulls are right when they say that bears are in denial. For what I'm seeing on a technical view. But I do have a couple of problems with this bull market, right? I do. And one of them is, first and foremost, the Fed is not done. I don't think the Fed is done raising rates. I think they're going to raise again in June, right? The probabilities just flipped. And why did they just flip? We're going to go see. Kitty, I love this guy. I don't know who he is, but he has phenomenal calls. He's killing it. And I wanted to show this right here. He has a screenshot right here, which was really telling, man. And no one is paying attention to inflation anymore, which is kind of hilarious. And he has a good point that inflation might not be as dead as people think, and it's roaring back, guys. And if you look historically speaking, the stock market is a very good leading indicator of inflation. gold as well. Gold and the indexes are most of the time leading, and then you'll see the CPI start going up with the markets. And right now, with the market continuing on this uptrend and inflation data picking back up, and the Fed is at 5%. Guys, the Fed is at a 5% terminal rate, and inflation is sticky as hell. And inflation core is super sticky. It's super sticky, and they're at 5%. The economy is so hot and so good. We did not have a recession. We still don't have a recession. Inflation is sticky. Now it's picking back up after it went down, right? And like I said, right? Inflation started going down after what? After the stock market started correcting, right? And then it went from 8% to now, I think 5%. I think we're at like 4.9 or something like that, right? But now look at the stock market. It's ripping back right up again, right? So I would not be surprised to see inflation data pick up quick, guys. And if that happens, especially this June and July, I think we're gonna have a fire summer. I think we're gonna have a crazy summer, man. I think people are gonna be spending like crazy, going out, dude. I think inflation's gonna start picking back up, and now everyone and it's funny because the bulls are not talking about inflation anymore. They're pretending like there's no inflation. And then my question is, if that happens, what happens to the terminal rate, right? What's the pain trade, bigger picture for the rest of this year of 2023? What's the pain trade? The pain trade is 6-7% terminal rate, right? And in my prior video, I showed the disconnect between the yields, right? The bond yield, the 10-year bond yield, and the QQQs. Someone's gonna snap, right? So I have some longs on the QQQs, but you know, I'm not. Am I adding right now? No, I'm not. I would not add at these levels, and that's kind of my concern. And I would not be surprised if that's the thing that just completely makes the market go down. You know, another leg down would be very interesting. You know, because at the end of the day, the Fed is not gonna drop rates this year if this continues. The market. Dude, the economy is hot, man. It's crazy. It's crazy, man. But anyways, yeah, this is another one as well. Another screenshot from Kitty. He has really good stuff, man. I don't know where he gets this stuff, but it's some good stuff. And man, inflation is not going away, man. And the Fed is not happy seeing this. Yeah, so now going back to, I'm gonna go back here. I wanted to show real quick as well after. So basically here I explained to you kind of, you know, the bull thesis, right? And it's important to understand that there's a lot of bears out there. Okay, so this is my system, guys. This is my macro business cycle. It's been remarkable. It timed the low in COVID, and I combined this with the yield curve inversion. It has a real above 90% win rate. And we're still at the peak. This is for Canada though. I just put this screenshot because I had the names put in, and I just wanted you guys to understand. So this is why I'm not long-term bullish, guys, because my system is not. It's not a personal bias because I think or I don't want to believe. I'm just looking at my system, and my system is not telling me that. It's telling me we're still at the peak. That's the problem, and we have inflation that's picking back up as well. So, and a Fed that's already at a 5% terminal rate, and it doesn't seem to be working, you know. And yeah, and so basically this bigger picture was my my PT right here on the SPY. I drew this a year or 2 years ago. It's between 320 and 270 on the SPY. I could be completely wrong, and that's why I'm doing this video, to try to debunk myself, you know. And that's what investing is all about, you know what I'm saying? It's not about an ego or, you know, thinking you're always right or you're better than other people. It's about, you know, learning, and I could be dead wrong. And as you can see, I love using these clouds, and it bounced on the clouds that I use. And I wanted to buy more here, but man, and the reason why is because of my standard deviation system that I'll show right here, right here. This is a good one right here where you have the cloud right here, right? We bounced here, then we bounced here, right? But we also hit the second standard deviation on the monthly, right? And this is how I trade. I love using standard deviation. It makes a lot of money. It's simple. It works well. You know what I'm saying? But the problem is my macro system right here. And this is the US one, by the way. The first one I showed you right here, this is for my Canada macro business cycle. This is the US one. It's the same variable, just the Canadian one and this one, the US one. And this is why I'm not going all in, guys, is because of my system. We blew through all the levels. It's crazy. But I don't just look at this or the color box. I mostly look at the RSI. I like to put the RSI on it. See COVID in the green box. That's when you buy, and look at the RSI, right? That's when you buy. This is 2008, right? Boom. That's when you start buying long term. And right now we're still at the top, guys. That's my problem. And then when you combine this with the yield curve inversion, which is the blue line below, and you look, every time it inverted with my system being in the red color box, right, and the pink and the red color box, that was never a bottom. It was never a macro bottom. And so that's kind of my problem with this bull thesis, right? It's my system, right? It's not my personal opinion. It's just I'm looking at my system, and my system's not telling me to long. Okay, guys. And right now on the Qs, it's pretty crazy, man. If I zoom in, we're at the 61% retracement of Fibonacci's on the cone right here. That's the probability of distribution. We're in the second standard deviation, so 95% probability we peaked, only 5% probability that we do go higher. And then on my LRC calibrated on the 100 period, which is very strong, it timed the bottom here. It's at 2.5, almost at the third standard deviation, which is the red line right here. So when you look at the probabilities, buying here, is not, I don't know, guys, but this is the golden cross right here, right? We did cross on the EMAs, so that's kind of the issue. And this could be a bull run. And if it is a bull run, guys, we're gonna blow through all of this, and it's a roaring 20s all over again. Problem is, inflation's picking back up. The Fed hasn't done its job yet. They're not shooting liquidity, for all I know, new liquidity yet. They could be though, right? But they haven't yet. I don't know why the liquidity thing on Sentiment Trader is not working anymore. I need to go look that up later on. But anyways, so yeah, and right here I just added more Fibonacci's from the low to the high. And right now this is the 23 with the 61. So this is a really strong resistance level, guys. This is strong, right? So now the question is, are people going to buy here? Because I'm not buying this. This is like literally parabolic. So it's like, are people going to buy this, right? And this is a strong level. I would be shocked if institutions are buying here. I would be really shocked. So this is why I do not recommend buying. But like I showed you the smart money, dumb money chart right here, confidence right here, and smart money seems to be buying, so which is pretty crazy, but they seem to be buying. So I don't know. I don't buy at the 61 like that when we're parabolic and we're at the third and second standard deviation on the weekly. Not my style. This is the S&P 500 as well. We crossed right here, the EMA's crossed, and this is one of the big bull case, basically. EMA's crossing, and it's a good point. You see here we cross here, I turned bearish myself. Here we cross bullish, we cross here, that was the COVID crash, right? It has merits, guys, but basing it all of it just on EMAs. This is the DAW, the probabilities of the DAW on TradingView, of my system on TradingView. This is the Russell. And honestly, if I'm wrong, this is what I'm kind of thinking. Maybe, if I'm wrong, I should buy some Russell. You know what I'm saying? Like when I'm looking at this, the best risk reward right now is probably the Russell. The QQQ is a terrible risk reward in my humble opinion, especially when you look at where yields are and where credit is. It's really bad. This is TLT, right? TLT has not moved. It went down actually because yields went up. This is really bizarre, guys. And yeah, oh yeah, this is the chart of the week. Well, I mean, Nvidia is, but this is SMH. This man, I should have bought this one. This is one of my biggest regret. I have some AMD and Nvidia I bought, but man, God, I love this ATF and I missed this entire thing. I'm pissed about that. This is my biggest regret, and we're already at the highs, man. This is crazy. This is crazy. It's really crazy when you think about it. And everybody missed it. So that's pretty much it. That's why I would not be surprised if we continue seeing FOMO. And that's why, when you look at the technicals, and my God, and there's so much money on the sideline, guys. And yeah, the Bulls they have a good point, man. They have a good thesis. Um, yeah, that's pretty much it, guys. That's all. I just wanted to cover the Bull case, kind of give my thoughts. Um, you know, and yeah, kind of just um, yeah, just kind of look at it, think about it. This is kind of a quick one-shot video I wanted to film. I have no idea how long this video is, but it's pretty much it. So all right, have a good one, guys. Stay best. I might do another video as well, just to refresh my thoughts and my final thoughts. Right now I'm still thinking. I'm looking at my system. My system is still bearish. Bigger picture for the macro environment. Inflation seems to pick back up. Everybody's calling a new bull market because of AI. I don't know, guys. Credit is not following this new bull market narrative. Um, there's not an injection of liquidity in the system. Fed terminal rate is at 5%, going up. Wouldn't be surprised if it goes to 6-7% if this madness continues. One thing I do know is I will be putting more of my cash in CIGs, right? There's some crazy deals, right, by the way, guys, in CIGs with banks, like 100-day CIGs, 3.4% interest. That's crazy. That's really good. 4%, 4.6%. It's really good. So I might be doing that. Yeah, I think it's 3.4% for a CIG of 30 to 50 day, right? So that's really good. So yeah, that's pretty much it, guys. And yeah, all right. So have a good one. I'll make another video to update what my thoughts are.